Great. Wow. That's crazy.
Hey, Haley.
Hey, Rick.
Very good. I'm going to be off camera for a little while.
That's good. I think I'm in your parts of town today.
Say again?
Are
You're in
you are
Houston?
you from? Yeah, I'm in Houston.
Okay.
I'm by Chinatown.
Oh, okay. Bel Air area? Yeah, it's just 10 minutes from where I live.
Hey, I can make the presentation from work.
How long are you in town?
Hey, Floyd, welcome back. I'm gonna be in town until about Saturday. Then I'm gonna head back to San Francisco. Just me and a few friends here and there, looking at some properties, and then I'll be back.
Enjoy the good weather we're having here.
Yeah, it's not too bad right now. It was a little warm in the morning, but it's chilly right now. Surprised how much development always goes on in Houston. It's crazy.
Yep. It is crazy. They're just building.
I did not realize it, but today the DJI actually reached an all-time new high. I'm surprised. I have all the indexes to reach a new high.
Yeah, I think that one and the Russell. There are the two, I think, to hit all-time highs.
Russell finally hit a. Oh my Lord, you're right.
Yesterday was the high. I think today just missed or something. Very close.
Yesterday was a new high, and today broke out even. Today broke out even
Are
higher.
you surprised that it hit all-time high?
I don't know this market. I don't get it. What is going on? I'll share my screen.
Well, look at the price of silver. It's another all-time high today after multiple all-time highs. Silver hit 64 today. It closed at 63 and change, but that's up more than 100% from January 1. Silver is a silver index.
What is this?
But Floyd, if you look at silver futures, that's not the all-time high.
Did you say it was or not? Okay. It was amazing that it was up like 5% basically at the open and drifted down from there. I thought silver was pretty expensive when it was 35 and 40, and here it is at 63. Gold is close to an all-time high. What is interesting is that maybe, I don't know how long ago it was, maybe 5 months ago, the gold to silver ratio was 100, meaning that if the price of gold was 3,500, silver was $35. That ratio has gone from 100 down to approximately 70 in just a few months. Silver's been the clear winner as a comparison to silver and gold.
But that is how precious market work. Gold is the first mover, and once gold starts stalling or coming to an end to its rally, that's when silver picks up, because silver is considered as poor man's gold.
What's interesting, my son, who was up here visiting, went to Costco yesterday, and he called me up and he said they have a 10-ounce bar of silver for $618.99. If you buy it with a premium Costco card and the Costco credit card, you get 4% back. They were essentially selling it at the price of silver or maybe even slightly below with the 4% back. It made it even better. And he called me from Dallas a couple of hours ago on his way home, and I said, hey, that silver bar that you bought now is worth about $640. It's just an interesting data point. I'm not saying anyone should buy silver or not, but I bought Nugget in UGT, which is the gold miners times 2, and Nugget is up approximately 300% this year. So that's the best performing Leverage ETF that I own right now. It was up 13% today. I got in early in the year at approximately 43 or so, and here it is at 185, and after hours 186.
I'm gonna.
Yeah, that's awesome.
So the question is, when do you sell?
That depends on how are you looking at it, right? If you're looking at gold, once it made an all-time high, it kept going crazy. But to understand that, you have to understand the gold chart from monthly perspective. It was forming a humongous base. The larger the base, the higher in space.
I agree. But for example, when it got down to 118 end of October and November, since I got in at $42 or $43, I wasn't worried at all. I thought I'm just going to hang in there expecting recovery. Nobody knew that's what was going to happen. We went from 118 to 185 in about 1.5 months. That's a huge run. So if you look at the YouTube videos, you can go crazy because there's some loose cannon people out there that are predicting shockingly high prices for gold and silver, and you have to view that as just noise.
What are the prices you're hearing?
There's a few people suggesting gold like 25,000 and silver to 200.
Okay, that's really shocking. 25,000 is shocking.
Yeah, you just have to view that as static. It's interesting to see such a strong move today. And then after hours, even stronger here on these miners times two. So it's interesting. Maybe look at a weekly chart on this one. For a long time in 22 and 23, it was just going sideways, up and down, pretty erratic with some volatility. It goes through periods of sideways or volatility, and then now we're on a strong run up. Look at monthly, a strong run down. Look at the long term.
Don't look at NUGT if you're looking at a long-term chart. Look at GDX.
Like X-ray.
That's gold miners.
Yeah. So
Yeah.
you can see from 2011 to 2015, it was on a strong run down from 60 to 14, roughly. That was a horrible long downdraft.
But also, you shouldn't be looking at the miners. The miners they're weirdly affected by stuff. I would just look at the index, which is GLD or SL. So, yeah.
Anyway, I'm sorry, I think I'm getting this diverted a little bit from what you want to talk about, but it's the best performing investment I have for the year is Nugget in UGT.
So let's begin.
Sorry,
Okay.
Keely, I have a quick question before we start, if that's okay.
Of course.
I joined, I want to say 2 meetings ago. I've really been enjoying this group. Thank you so much for organizing these. The one question I have is you talked about the signal fires, the signal says we should be in the market. And I looked around to figure out what the signal was. I don't know what the signal is. Is that somewhere I should be poking around to figure that out?
So pretty much I go to IBD and Steve Sweat and a few other people and to see what the signals are. I also use Gary Taylor's Leverage Edge to see where the signals are. So I was going to update you guys, but why not? Relevant to a slide I made. The last follow through day was 11/25/2025. So it's pretty recent, just about 2-3 weeks ago. And this data I pulled from IBD and Woo yesterday, it was pretty much being 100% invested. You should be in the market. So those are the key data points I follow to see how my head is confused about the current market versus what other signals have historically done. Because if I'm not playing by systematic rules, I need a system to see how far off from the system I'm doing.
So there isn't a common set of signals we follow with the leveraged ETF strategy.
The leverage ETF, it really depends. If you're doing leverage ETF with Gary Taylor, you would probably do something like this. It's gonna look super crazy messy, but it's pretty much if you're doing like triple Qs, you're doing kind of SPXL, you're trying to do bulls, you're trying actually that XOXL, for example, TQQQ on the optional weekly and the regular both had a buy point on Friday 11/28, so you should have bought. Over here, there was a rebuy and there was a sell. I think the chart's not showing it, but I know there was a buy point a few days ago. So it really depends on which strategy and which
Yeah.
your pull
So
leverage.
How are you getting the buy and rebuy signals though?
So it's pretty much Gary Taylor's Leverage Edge. I just subscribe to it.
Oh, okay, fine.
Just to decipher the information a little bit, don't confuse the market with the XXX leverage ETFs. The XXX average leverage ETF uses purely technical analysis. It uses specific technical indicators like stochastics and I think
MACD.
MACD, yeah, 2, 3, 4. And you can go and check the recordings of last year around September when it was introduced the first time by Floyd. Great work. Thank you for that. So you can understand how the leverage buy and sell signals are generated, and then you can tweak it as per your liking. For the market part, you can either subscribe to MarketSmith or IBD. They provide when to get in the market or get out of the market. But if you want to understand how it really works, you can simply look at the stocks that are above their 50-day moving average, number of stocks above their 200-day moving average. These indicators are available freely on stockcharts.com. If both of them are below 50, then you have to be very cautious because market tends to drop. If both of them are above 50, market is really doing great. If 200-day moving average is above 50, but 50-day moving average, number of stocks below 50-day moving average is below 50, then that's usually the pullback. And once it crosses above, that would be your entry point.
Thank you. I do follow all those indicators. I was asking because I saw the charts with the buy signal. I wasn't sure where that buy signal was coming from. That's what I was.
Good question though. So, welcome to December 25. Disclaimer. The information presented is for educational and informational purposes only and should not be interpreted as investment advice, an endorsement, or a recommendation to buy, sell, or hold any specific securities. I'm a volunteer and not paid for this presentation. Investing carries significant risks, including the possibility of substantial losses. You should conduct independent research, carefully consider your financial situation, and seek professional guidance before making any investment decisions. Neither I nor any associated individuals accept liability for any investment decisions made based on this information. Who am I? You guys know me. I've been investing in stocks for about 20 plus years. My performance is still the same. Technically, I should have been invested into the market, but I am not. Oops. Thank you, NJ. Appreciate that. Technically, I should be invested in the market. I still haven't. I'm still at a plus 43% 1 year time frame. You're going to slowly see this number starting to creep up because in January of 2025, I did take some losses, and you're going to see probably more like 60-70% gain. The agenda today, some recurring topics where I'm going to talk about the leverage ETF strategy, some major events. The educational topic today is just going to be year-end planning matters. Like I messed up last year. I had a big gain and I didn't pay my estimated taxes, and I got a huge ding from the IRS, the California Franchise Tax Board. So use my lesson as a learning experience. General market update, as NJ was asking, last follow through day was at the end of November. IBD says you should be nearly 100% invested, and the woo from Steve Sweats is green. Let's look at some charts. What we see right now is almost a year to date. So remember in the beginning of the year, we went downward, then slowly started grinding upwards. Yes, there's been volatility. It's been getting us gradually bigger, but overall, it's been pretty darn good if you followed your rules, stayed out during the May, April, and then you invested after April. Same thing for every chart. Sideways movement, beginning of the year, went down and came back up. This is NASDAQ, and now this is Russell. This is data as of yesterday. That's why you see an all-time high in the Russell, but you see an even newer high today going up. Small caps are starting to come out of the woodworks. I did my growth stock watch list. I wanted to bring more charts in a quicker format, so I can talk about stocks I'm actually watching and trying to get back into the groove instead of just playing TQQQ, even though life is getting a little bit busy for me. So Blue Energy, BE, it's actually forming a nice little base. We don't know if it's a cup with handle, but it's forming some kind of consolidation. I'm not even putting a volume on this at the moment because we need to make sure that the price action is conducive to the stocks we buy. So I've just cut off all volume just to make it really hone in on price action. Stats, or aka EchoStar, I did break out of a pivot point. It's probably a little far away from pivot and it's not very viable. Here in Angles AU, just not viable from a base. If you've been holding for a long time, congrats. MU, Micron Technology, we take a look. It's definitely forming a cup. We're not sure if a handle will form at all. It depends on the overall market. If the overall market does form a cup and handle, or forms a slight correction and a handle does form, it might make for a really awesome breakout for Micron Technology. Kinross Gold, again, gold stocks and gold miners. As I think, I forgot who just said, miners do some weird things. That's why we both have miners and just regular gold. And we're just seeing where it goes, because in the end, we don't know who is going to be the big breakout star. So we take a look at both. LRCX, Slam Research is forming a little consolidation base. To me, that's a little V-shaped, but let's just call it a cup. The bottom is just went straight down and just had a recovery all the way at the bottom and just kept going up afterwards. So pivot point to watch is 167 for LRCX. BRT, Vertex Holdings, we'll see what happens on this basis form. If forming like maybe 1, 2, 3 bars, let's see if it forms another 1, 2, and we'll see how it goes. Google, it's doing fantastic. Google and Meta and the other things, I think it's having some potential to really break out these days. APP, some of our favorites. I'm sure a bunch of us have been in APP. It's just forming a double bottom base. There was a little breakaway over there, but it did hit 10 cents above and it's starting to break out even more. So price action wise, just pure price action, it's looking good. Planeteer, it's going through a major consolidation. It's been trying to break out. It hasn't really hit 20% profit targets, and it's just been trying to play around. I feel around the psychological like 190 to 200 area, and it's just been like messing around with the support there. Palantir is probably one of the child stars here that everyone still likes and pay attention to. Next one is FSLR, which is for Solar, it's the volatility is contracting a little bit, getting tighter. We don't know what's going to happen. Would it break to the downside, break to the upside? Depends on the market. We watch and we take action. For Tesla has a bunch of technologies. They're still trying to do robotaxis. They're doing it in Austin. They're doing it in San Francisco. They're doing it in a bunch of different places. And we'll see where it goes. Some people saying it's underpriced. What I believe is look at the price action and see where it goes. INCY, Insight, it might be breaking down. I haven't checked it today because it did break down below the 50-day moving average. Since this is a daily chart, I care about the weekly, see if it will break out and see what goes on. Because I think biotech and AI is going to be the two kind of latest and greatest things. If we can finally do more gene hacking and do more AI, I think we're going to be in a technology age from our current information age. Semiconductors, if you don't know what to buy, just buy SMH. If you're doing single ETFs, because we are leverage ETFs and growth stocks. So I want to balance that out. So you can't always buy it. Overall, semiconductors are doing well. Yes, there's been some news about Oracle that hasn't done well for the stock. But overall, AMAT, Applied Materials, is doing well. It's been going up. It broke out. There's some ants. There's some major stockholders buying. That's another semiconductor. ASML is doing very well. Avago, Broadcom, semiconductor is doing well. It's trying to break out, but it's really hard to hold, highly volatile. If I'm watching the stock, I'm definitely not holding. Microcaps, the Russell 2000, it's doing a very good job. Walmart, surprisingly, it's on my watch list because it actually is doing well. So both like large caps and smaller caps, I'm keeping a watch on because the overall indexes are telling me to watch.
Walmart is moving from NYSE to NASDAQ.
Really?
Yep.
Want looser listing restrictions?
Because stocks in NASDAQ are considered tech stock and Walmart wants to be a tech company.
Does anyone have any idea what's tech about Walmart?
They're trying to compete with Amazon.
Walmart.com.
And they're relying more on AI from what I've read.
Yes.
Maybe that's because I haven't kept up. I buy it, then I read the news a little bit more. Oh, Walmart.com is going to use Amazon.com. Sure. So let's see what happens. They've been trying to do that for years with 2-day shipping. I know they've been doing it and haven't been succeeding. They've had more third-party sellers and everything. Best of luck, Walmart. The dollars will show if it works or not. So I talked about 3, 6, 9, 12, 15, 18, 21 stocks. Is there any stocks that you've been thinking about and want the community to take a second glance at?
On the gold side, look at Hecla. It's performed amazing, and here it is up 12.5% today. It's a fairly small company, but notice the average volume is 18 million. And so if you look at the earnings per share growth, it's predicting a 242% earnings per share growth this year from last year, and like another 100% next year. So far this year, this has been a good one. I discovered this one by going to the Market Surge O'Neill screen about 3 or 4 months ago. The O'Neill screen identified 5 or 6 gold mining stocks. This one had the most appeal to me. I think I got in at 11, maybe about 3 months ago or so, and here it is looking for 20. I simply found it because of the O'Neill screen, but then I look at the fundamentals and the projected sales and earning growth compared to about 3 or 4 other gold mining stocks. This one caught my eye more than the other 3 and 4, but I imagine the other 3 or 4 have been doing well also.
It's gonna be a few. There's so many 99 comp ratings in this whole group. Any other stocks people want to take a look at or have comments on?
SoFi.
And of course, take a look at weekly. Volatile goes down to about 23, $10. Ooh, that could be a base, 20-30% base. Take a look at the daily.
So if you look at the SoFi all-time chart, it is breaking out. It's very close to that, and it's trying to form a base above that line. And once the base is over, then it'll probably break out. It has very good fundamentals.
The fundamentals are fantastic. So earnings is going up. It's finally positive. In 2024, they finally went positive, and they're probably doubling that in 2025. To confirm that, we're going to look at the quarterly earnings per share.
And look at the number of funds, 456 to 843. That's pretty impressive.
That doubled in a quarter. Let's see. JP Morgan took a full position, almost 1% of their fund.
Don't miss the breakout.
Don't miss this breakout. Okay, you got it, Yogesh. I think that was you. I'm gonna put an alert for myself too. Any other stocks people want to look at?
See, another one I picked up from the O'Neill screen, which look at that today, up 20%. It's just shocking to me. They had an earnings report, I think, today.
Yes, they did.
So today it was up 9%. These Ethernet switching systems, I don't pretend to understand. I'm mainly in this one based on technicals. The profits are projected to be 73% higher in 2026 and 35% in 2027. And all the moving averages are stacked on top of each other. And we're way above the 50 and the 200s. It's an interesting company that I just don't know what to do about it. When you get one that's such a good winner like this, when do you take the profits?
That's always the hardest part. It's like the story of the financial guy going into the bar. It's, hey, what happened today? Oh, I only made $100,000. What happened? I was up $1 million in the morning.
Yeah.
We're lucky to be in one of those markets where it's like profit taking. It's just a matter of when to take profits.
Yeah.
Any other stocks?
Check SNDK.
Nope.
And
And
like Nancy,
look at that run.
That went on in beginning of this year. Was this a SPAC or a re-IPO or a SPAC?
I believe so.
is this potentially from the build out of the huge data centers for AI?
Yes.
Look at the profits in 2025, $3, 2026, $13, 2027, $22. Those are shockingly wonderful numbers.
That's why the run from $50 to 250 within a matter of what, 2 months or 3 months?
Yeah, was there a spin-off of Western Digital or one of those companies?
Trying to see. If anyone finds out, let us know. Yeah, because SanDisk, I've always bought their kind of like their USB and their drives. So it's actually quite interesting.
Western Digital had bought SanDisk. SanDisk trades on its own. They must have spun it off.
So that's a good end factor. It's a spinoff. Western Digital bought them. This is crazy. What kind of?
And now it is starting to break out again from the small base that it is forming.
It's a good base that's forming too. It's 50-day or 10-week moving average. That might even bounce out. No clear early buy point unless you want to try it on a breakout over here, which is buyable kind of today. But that's making stuff up. But I'm gonna track this.
If go back to the weekly, notice on the lower left, it shows some competitors in the same industry of Washington Digital, Micron, Seagate, Silicon Motion, and Pure Storage. My son, who has been up here with me for over a month, was commenting how Pure Storage had been stealing some business from IBM. When it came time to produce, they were apparently disappointing their clients substantially. So put in PSTG and look at the recent price action. It's interesting to see it went from 100 down to 70 on one day. That was the bad news day. It was the earnings per share day. His comment was, if you wanted to short a company, this would be the one to short. He feels like they're making promises to customers that they're not going to be able to fulfill.
Boy.
Anyway, that's just a little comment, just commentary, but it's in the same group as WDC and SanDisk. Got to be careful when you're in a group of stocks, which one you choose.
Wow, you're still telling me that even though Western Digital spun off SanDisk, it's still going up like a rocket ship?
Go to the comparison window, which is that right there.
Nope.
And enlarge that a little bit, make that fill up the screen. And now put in SNDK and put in Micron, MU.
I'm gonna redo this chart.
Well, that's okay.
You could just take the NDX off with the trash can icon
Thank you.
to the right of analyst.
MU, you can hardly see it. It's down there at the bottom. I don't remember what some of the other names were there, but obviously on this
Seagate.
one-year comparison, SanDisk is the clear winner.
Seagate is the other big one. There you go. Yeah, SanDisk.
Put in that PSTG, I think was the symbol for the one that,
Pure Storage.
look at it, hits at the total bottom. So this comparison window is a pretty handy window to use on the market surge. You see about the top middle where it says 12, 11, 24. Make that 6, 11, 25. You can go for a shorter duration to see the most recent price action of the last 6 months. They seem to be stacked up pretty much the same. It's an interesting tool available on Market Surge that makes it easy to compare. Put in SOXL. Might be interesting to see on the triple leveraged. You see SOXL is way down there. Interesting.
Wow, it's one of the worst performers.
Yeah.
Try TQQQ. So Excel is not so present. Oh, there. Wow.
How about the TNA?
Oh man.
Look at there. The SNDK is whipping everybody.
Yeah.
Let's do it since April 14th. And let's see how that changes things. That was the start of this year's rally. If you bought it at the start of the rally, TQQ, TNA, it's just down there along with Pure Storage. But hey, everything looks like it's made money. Any other stocks shall we look at?
So even though it's somewhat down on the list, that's not shabby performance.
Let's just switch it back for you.
TQQ is up 131%. This chart's opened my eyes up. This is pretty amazing. STX, WDC, and SanDisk, SNDK. Wow, what performance. So let's go look at the SanDisk daily chart. Where's a breakout or a buy? Do you know how to draw the red line on the chart?
Yep.
Okay, go to the 284 or whatever that is and draw a line at about a 45-degree angle down. Was today a breakout day, for example?
That's why I was like, that random line that I would draw in my head would be this little gap up day. And that usually it's a support/resistance.
I'd be interested in other people's comment. Is this a buy?
I always look for the downward sloping trend line to have at least 3 points that it's going through. I don't see a way to do that here.
I see 3 points. The first one, 3 or 4 days later, was the second point, and today was the third point.
So this one,
One,
second
two,
one is,
3.
that second one's pretty high up, though. It's almost as high as the first day.
Look at the pink bar about 4 days ago. That was almost a touch point too, right there. This is all sort of an art of investing. There's not a right or wrong way to do it, but it looks like obviously it's too late to buy it today. The market's closed. In fact, it even went down $4.61 for some reason after hours. But maybe there's going to be a new buy opportunity. Does anyone own this and have any comments to help us understand if this is one to get into?
Yeah, I own it. I just bought it like 2 days back.
Okay. Can you show a little more enthusiasm about it?
I bought it based on stochastics. It gave me a buy signal. I saw the run, it is going sideways. And then today it was breakout. I'm expecting it to go to its all-time high and then probably go sideways a little bit.
So go up to the wrench, and on the wrench, you can put stochastics on this chart right there.
right there.
Why didn't you tell us a couple of days ago that you were buying it?
That's all we say about the winners.
That's an interesting additional consideration when you look at this particular stochastics. It's looking back 14 days when it does this analysis. And if you go to the weekly chart, it goes back 14 weeks. The stochastics look totally different on that chart, but it appears there might be a crossover there.
Last week, that might have been a crossover.
Yeah. So anyway, by looking at that comparison window and looking at these charts, this one was not on my radar. It looks quite interesting.
Can you do a tight flag on this? You have to scale the rules up because the run up is just downright insane.
Yeah, that almost looks like a flag. The big unknown is, when is the Supreme Court going to announce whether Trump can institute tariffs or not? And if the answer is no, how much money has to be refunded to a bunch of companies? One analyst said if the Supreme Court says no, that the stock market will surge substantially higher. It's just one person's opinion, but that's an unknown out there. We don't know what day the Supreme Court's going to finally decide.
Yeah, because a lot of people, including me, have paid a lot of taxes to get stuff from overseas right now. And I'm like, you just pay it to whatever, FedEx, UPS, and it's a thing from the American consumer. So it's like all of a sudden, maybe it's another refund check like during 2020 where everyone just got a refund. But this is mainly the richer people who are buying overseas and buying stuff for the business.
Yeah. It's really nice to see, if you go to the far left where it shows the earnings estimates, those green arrows mean analysts that recently increased their projected earnings. So when you see a green arrow, that's another positive sign for a company.
That
So they raised the estimate for 2026 and 2027. It's a pretty intriguing company.
Any other thoughts from
Overall, just fundamental basis for SanDisk as well as Micron, like both of those have some really strong tailwinds going. Go and look at the price of RAM right now. It's gone up 3x in the last 6 months for consumer RAM. And the reason for that is because all the RAM and the flash suppliers are having their supply bought up by the AI companies. And I believe there's strong tailwinds for both Micron and SanDisk for a while. On the fundamental side, it seems
What's wrong with the price of RAM?
that's what I said. It's gone up 3x in 3 months.
Glad I don't need any RAM.
I used to
That's
go
great.
So
That's free.
if people are listening in. The price of a 64 gigabyte 2 by 32 gigabyte RAM, $839 by Corsair. Corsair is very nice. It's top of the line, right? But seriously, that's the price of my freaking computer.
Didn't it used to be like 1/10 that much not too many years ago? Like $100. No, maybe 200, 100 to 200. That's off the wall. Wow.
Still DDR5. It's not like even DDR7.
I built a computer with 64 gigs of DDR5 6 months ago, and that cost me $128.
Wow.
Oh, this is the reason why some cell phone manufacturers are considering to go back to having a slot for external memory cards, for micro SD cards, because they are cheaper than RAM.
Wow. I'm flabbergasted about the price of RAM. That's insane. So maybe that's why SanDisk is going up. Wait, does SanDisk make good RAM though? I haven't really heard about theirs.
These SSDs, the price of SSDs is also going up, just not as fast as RAM.
So let's check out the price of SSDs. These are portables. It's not too bad. It's not crazy. Let's say 2 terabyte SSD. Apparently it's the same as 512. It's both $190. Sure. The weird world of consumer supply and demand.
Getting back to stocks, CRDO.
Freedom. Earnings growth, the little upside, the little triangle that's green analyst has estimated up, has broken out of a little EPS base. So it's finally going upwards on the EPS line. So it was in less than $1. Now it's going to be over $2 in 2026. And also this year it's probably going to break out to over 70. Estimates are triple digit earnings, which it's in line with the annual.
If I might ask, what is a serializer dash deserializer? I have no idea what that is.
I'm not sure where we got that from, but deserializer basically is something that takes a whole bunch of information from memory and writes it to disk, or reads it from disk and puts it in directly.
Is that like RAM going to hard drive?
The idea is you have some data. If you think about AI, what's happening with build an AI model is there's this huge structure being built in memory of a computer that has a bunch of numbers in it that map to weights, right? Now, instead of like literally writing a program that encodes that, you can take that whole section of memory and dump it to disk so that, let's say, power goes out or your computer crashes or whatever. You want to just restart from that state. You don't want to lose days of work.
Yeah.
So the deserializer would basically just take that memory state, dump it to disk, so that you want to restore from that point, you can do that.
So
When is the next earnings report? Or did they do one recently? You have to go to the daily to see that.
December 1st.
So they had an earnings report, and then the stock drops every single day except 2. The earnings report closed at the bottom of the day, and the next day it tried to come back and got a tiny bit higher, and then it seemed like the price is collapsing. I'm wondering where people, this is one of those deals where the company produces all-time high earnings and sales, and the stock goes down because they don't like the way the forecast was structured or the tone of the presenter or the way the questions were answered sometimes when they have the earnings call. It's interesting that we're showing increased sales and increased earnings, and the stock has dropped substantially from 220 to 154 in about 1 week.
Yeah.
It might be trying to form a base. We don't know that until it breaks down below 120.
Yeah.
Yeah. It's got to form a new base. Maybe it'll be a higher little base on base. Or a couple with a really high handle, which I think is invalid.
How about NVIDIA? Your favorite stock there, Haley?
I still haven't sold too much I've only sold 20% of my position.
My son told me that IBM has just filled a huge order from one of the S&P 500 companies, and they can't get their hands on NVIDIA chips. The modules are 100% constructed. They're going to deliver them to the client with the idea that when the NVIDIA chips finally show up, they will send techs out, install them, and run the diagnostics in the field. But he said they can't get their hands on I think it's called the H200 or whatever whatever it is. He said IBM cannot get their hands on them.
Then why did Trump release NVIDIA to China? If
Exactly.
Americans can't get their hands on NVIDIA.
Exactly.
With the stuff Trump decided to China is 1 generation old. Nobody wants to buy that now.
Oh, that's actually a pretty smart move financially. So we get the H400 or whatever.
I think it's called Blackwell or something like that.
GB300 or something. I forget exact word is. That's the latest generation.
But the DeepSeek is running on the newest chips from NVIDIA, taken from black market.
Yes, I am pretty sure of that too. That DeepSeek is running NVIDIA, and I've had so many conversations with friends about DeepSeek is making it cheaper than everyone else, and they're not even using NVIDIA chips. Cool. So I think that was a good run on the stock market.
GE Vernova. GE Vernova. I think it's GEV.
Victor, there you go. Yeah, had a wonderful day today. Look at where it was in June of 24, 120, and now it's 704. Goodness.
It looks like it's breaking out as well, right? Yeah, some amazing results.
Yeah, it's clearly breaking out of that flat base. It's probably, 3 or 4 months old
Yeah, it could go all the way to 1,000.
since August.
Yeah.
That is amazing.
Do you think it's actionable now, or you need to wait for it to come down a little bit?
I think it's actionable. Reduce your stop loss just a tiny bit so you don't take too much off your portfolio position size.
Yep, it is actionable. Look at the volume
Yeah, that's beautiful.
Right.
yesterday.
I've got some bull put spreads and bull call spreads already, but just looking at a longer term.
I haven't looked at GE Vernova in forever, where it was like when GE split it off all their systems.
Yep.
Awesome. So if you guys have stocks you want to analyze, go ahead and chime in. I'm going to talk about Gary Taylor's Leverage Edge left strategy update. So pretty much how has he been performing this year? So as of the end of November, Leverage Edge strategy on TQQ using the optional weekly chart has been up 79.4%. If you're a holding, you're up about 31.1%. So pretty darn good, outperforming by quite a bit. The max drawdown this year was 13.3%. So pretty darn good. So how's it look this month on all the performances? Performance for the year, 5 years, and percent performance year to date. So Soxel, one of Floyd's favorite, is doing the best. Nail, which is home builder, is doing the worst. It's down about 30% year to date, and it's the only triple leverage ETF that Gary Taylor tracks that it's in the negative, which is sad to me, but that's the market. Financials are doing well, FANG is doing well, S&P 500 triple leverage, and just everything else in technology is doing well. Any questions, anyone? So as a chart, we touched on this, the buys and sell signals, and see what's coming up. I cleaned this up a little bit more. You'll get the slides after this, but as you can see, right around 11:28, there was another buy on the TQQ. I think I took this screenshot a little too early, so there's no buy point of Soxel because I know there was. FANGU, there's a buy point. Fast was a buy point. Nail has just been getting hammered. Excuse my pun.
Yeah, I got nailed by nail twice. Yes.
So this is the market, and we just watched the market. Major events that potentially affecting the stock market. So FOMC meeting was, I think it was just yesterday, and rates were cut 0.25%. So Jerome Powell's I think he's pretty sure stepping down next year. So there's gonna be a new Federal Reserve chair, and he's saying there's only one rate cut next year. I didn't get the moment to update it today, but does anyone know what happened in the PPI today? It seems like it was probably bad news, but it recovered because I was just watching price action on the market. Sure. Non-farm payrolls coming in. There's probably a 4.2% employment rate. It's still going steady. Nothing's going crazy. Consumer price index is still pretty low at about 0.2 to 0.3%. Also, the personal income should be actually increasing a little bit. So Hopefully things will look better. Just remember this December 20th, the index is going to be rebalanced. So volume is going to be a little bit higher. And our topic today is going to be the end of the year, making sure that you're watching for your portfolio, taking losses if you're making a lot of income on another position. Most of us here, I believe, don't just have one portfolio. We have multiple portfolios. Any questions? Cool. So tax loss harvesting. Remember, if you took a loss this year, it's okay. Go back to your rules, see what's going on, see your batting average. What's your biggest gain, your biggest loss? Was it because of one loss that you over leveraged and all of a sudden became a negative year? See what happened. So if it does happen, IRS has a rule that's okay. You still can reduce your income by $3,000. And of course, the unused losses can always roll forward indefinitely. So if you're still trading the market and you finally succeed, all those losses get wiped out because you have enough profit. Please be careful of wash sale rules, meaning don't buy and sell within 30 days. It makes things very hard on your taxes and you pay a lot more taxes. Long term can be applied to capital gain, short term towards your income for losses. So plan your trades accordingly to see what you want to do. Sometimes I do keep losses for years just to make sure when I have a great year, I sell it. One thing to do for myself, even though I have 0 stocks right now, it's you should do this on a quarterly basis, not just on the year end. Just a reminder, look at your holdings. What was your initial thesis? Was it a technical thesis? Was it a fundamental thesis? Was it an event-driven thesis? Does it still perform according to that thesis? If not, see if it still can get some alpha. See if the price action still can go up based on a new thesis. If not, maybe it's time to sell because some of us might like gambling and just wants to see the price go up and we don't know why we're in it anymore. And that's not our systematic approach to stock investing. We want to invest in stocks to make sure that we have our rules, we have our system to invest. And of course, don't start in 2026, start now. Do the performance on your own portfolio. You can't just look at the dollar amount, but what matters is your business, your stock trading business. You track the number of winners, you track the number of losers. If you have every 10 winners, you have 5 losers, that's pretty nice. Or you have every 10 winners and 20 losers, that might be okay. It depends on your rule set because if your losers only lose 1%, it's okay to have 20 losses at 1% and your winners actually get like 25% each. That's a pretty good system right there if it's only 1% loss. And you also have to evaluate your number of trades. Are you over trading? Are you under trading? I'm very likely under trading this year. So that's something at the eye already. It's just like I shouldn't. There's been 2 chances for me to get in. There's one in September, one in November. I didn't not get it. And that's something for me to see my own trading and see what I can do for either the next few weeks or even next year. And this is one of my key things of why I trade. I always compare my performance against benchmarks like S&P 500 or NASDAQ because if I'm trading, I'm spending time looking at market split. I'm spending time using my indicators on TradingView. If I'm underperforming the market, why am I doing it? Am I reducing my mental load a little bit because I know that I'm not in the market, I can't lose any money, and all my gains are now just solid? So you have to think about comparing yourself against benchmarks to see if you can reduce your own mental load, if not, reduce your own stress. This is psychological trading. Sometimes we do trade against ourselves. Do it every quarter. Once a year is not enough. Education plans. These are some of the people I like. Harry Freeble, he does the meatballs. Larry Williams, he does like forecasting based on 10-year patterns, 5-year patterns. Jim Ropel, he was a disciple of William O'Neill, so I really like him. Same with Joel Klein. Lee Tanner is probably the guy who is still trading most true to how to invest money in stocks, Revere Assets, also an IBD trader. And I just like going to IBD so much. I rather execute one system extremely well than knowing 15 different systems and try to do everything okay. So I gave a mention. Retirement and contribution planning. December 15th is coming up. Pay your estimated taxes if you have estimated taxes. Do not forget it. I paid a penalty last year. Make sure you do your 401k contributions, making sure it's completed by December 31st. There's no exceptions to that. The IRS is very strict on these. But if you have IRAs, the deadline is April 15th. So before you file your taxes, you can always contribute to that. You can do Roth conversions if you have lower income this year. You can also do super Roth and backdoors for your 401ks to make everything into a Roth or IRA and pay taxes now instead of paying it later, stuff like that.
So, quick question. I thought it was January 15th you had to pay estimated taxes.
I need to double check on that. It should be January 15th because it doesn't make sense for December 15th because you don't have your accounting done. You're right.
Just for the benefit, even if you pay your estimated taxes, you still get charged penalty. I got charged penalty last year as this year for some reason.
Yep. If you underpaid, if you overpaid, you know what just happened to me? I cannot pay my California taxes by check anymore. I have to do it directly because I underpaid by way too much. Whoopsies. Me too.
No, I actually overpaid and I was getting a refund, but even then I was charged a penalty.
Gautam, if you pay the estimate taxes in the first quarter, pay more than the other quarters. I've seen that avoid some penalty somehow. Yeah.
I think you have to pay it every quarter, but I usually just pay it end of the year. You have to pay it every quarter if you pay less in the earlier quarters and more in the later quarters because you have more gains in later quarters. You can get charged penalty. So there's a way to avoid that. It's called annualizing your gains, where you tell IRS when you made each piece of money and then you pay it. I got caught by it too last year.
I just Googled it and it said for 2025, estimated taxes April 15, June 16, September 15, and January 15.
Got it. Thank you, Floyd. So it is January 15th, 2026. 2025, sorry. What trends am I looking into 2026? I'm in a place called San Francisco where they're calling themselves the AI capital of the world. I'm in real estate where every single person is working in AI and I get to see their salary, and their salary is absolutely ridiculous. It's in 7 digits and you're making income from that. A 3-bedroom, 2-bath, single family home can go for $8,000 and that's their monthly rent. So AI and what matters in every single economy is how spending works. If people make more money, they are going to spend more money, especially the amount of disposable income. So that's why even with more disposable income, we want to make sure that inflation isn't the same rate as the amount of money you're getting your raises. So inflation is not that high. Raises are coming up like crazy, especially for the AI space. Meta is poaching people at, these are rumors I haven't seen myself, paying people $10, $50 million salaries. So it's absolutely insane. So watch out for the AI growth. And also I forgot to put this, it's about biotech too. Biotech is in an infancy stage. I think we finally hit over a crest that we can do some amazing things with biotech. Floyd sent me these because he was like, hey, just remember to put these. Going to turn 73 this year. Remember to take your required minimum distributions. If you don't withdraw, guess what the IRS loves to do? Penalties. So just remember, if you turn 73 or older, please make your withdrawals. And just like at first, make your Roth IRA conversions to reduce taxes, especially for your 401ks, because your 401k rollovers are pretty much, you can do it because you're at 59.5 plus. And if you have, let's say, huge gains like my NVIDIA position, you can also think about gifting charitable positions because that way you can actually reduce your taxes even more because it's the gain, it's the capital gains on your stock that you can actually write off. And you don't have to take capital gains tax on appreciation. Today, I'm including these slides for all future meetups. It's just what's my email, where do most people join is meetup.com, and the group name is stocks. The Google Groups is Google Groups /G/Leverage ETF. There's a wiki on Notion that I've made. That is pretty much the whole presentation. I wasn't going to go very long in December. We can come back on January 8th and do a recap of the top growth stocks, what has been breaking out like crazy, what's been going on. And for the next 30 minutes, an hour, we can talk more about stocks. Or if anyone needs to head out, feel free to head out.
So I got a question. Hey, Floyd, markets are hitting all-time highs. They have been doing it fairly routinely for most of the year. So the question I have is, what's it going to take for you to get back in the market?
I have a little bit about my life right now. So I'm planning for a family right now, and that's been taking up most of my time. My first kid is expected in May. And because my first kid is expected in May, I'm like, okay, What do I have to plan for the kid? What do I have to plan for the house? What do I have to plan for the parents? And that's been taking a lot more time than I would have ever thought. And also just taking care of the wife to make sure her knowledge is not too much. So that's like, that's my thing. It's I think I might actually trade more leverage ETFs because of just life events. So I got married in June of 2025, which is this year, right? And then afterwards, I found out that I'm going to be a father. So I'm like, wow, there's so many little life events that's happened to me that I'm just different. And I don't know what's going to take for me to get back into the market. When life settles down, which is never, because every single age of the kid's going to be different.
Let me share with you. I don't know if everyone knows. People live in Alaska get paid to live here. We get what's called a permanent fund dividend check. A permanent fund is managing about $85 billion. That's part of the wealth that we've earned up here from oil being produced. And so 30 years ago or so, some smart people set up this fund. And if they hadn't done it, that 85 billion would have been spent and gone forever. And I think Norway has a sovereign fund that is worth, I don't know, $10 billion or something. That the one in Norway is huge. But anyway, where I'm getting to is, so every year my grandkids get a check because every man, woman, and child gets a check. And so what I do for the grandkids is we put 50% of their money into QQQ and 50% into SPY. And so if someone is busy but wants to be in the market or isn't sure where to invest, a way to tiptoe in the market potentially would be either QQQ, which is the NASDAQ 100, or SPY, which is the S&P 500, or like I'm doing for my grandkids, we just put 50-50 in, and the grandchild that's 15 years old, I think his account is worth more than $40,000, and the 13-year-old, his account's worth about $30,000. On a long-term basis, there's been some ups and downs like COVID, but one way to gauge how the market is performing is have a little bit of your money in maybe an index fund is a possible thing to consider.
Might do that because right now it's like when in my younger days, I'm usually just like gun ho on growth stocks and really concentrating every day on certain things. So maybe it's time for me, something I haven't done in a long time is just buy indexes of QQQ.
Wow, Richard just said the Norwegian fund is worth $1 trillion. So just imagine what the profit or gains are on a $1 trillion sovereign fund. I don't know if they're using some of the earnings for public construction and social programs, but my guess is they're doing the same thing Alaska is doing, taking a share of oil and minerals and taking that and putting it into stock market, real estate, bonds, whatever they want to invest in. What Alaska does is they hire big league people out of New York to invest the money. And if they aren't happy with them, they toss them out and hire another group of people to manage the money. I suspect Norway might be doing something similar to have someone manage the funds. Can you imagine if you had $1 trillion and if you just earned 5% a year? What kind of money would that be?
$5 billion a year. That's enough to build a California high-speed rail.
50 billion a year, 5% of $1 trillion.
Oh, 5% of, yes.
50 billion. Pretty good interest right there. Pretty good mutual fund.
I believe that distributing that somehow with the general population, 5 million people. I don't know all the details, but yes, they've been very smart about it. And to their credit, they've grown it.
If someone hadn't set up these funds, the money would have been spent. And then what would you have to show for it? Maybe there'd be some good things to show for it, but most of us up here are pretty happy that the guys had the foresight to start putting money away. It wasn't all that many years ago. Our fund was worth 20 billion, and now here it's worth about 85 billion. And a lot of that is because of the stock market.
I think ARK fund's still not all-time highs. I think I remember it's 150 or something, and it's approaching 100 now.
Okay.
Does anyone else want to talk about any other stocks tonight?
Hey, Haley Gilbert, the SanDisk and Western Digital, all those round chip, did anybody know where they made it? Still TSM, Taiwan Semiconductor Liquid? And I just want to know. And second thing is congratulations for your kids, new kids. That is a good shelter. So look at that way. Thank you.
Yogesh, any chance you know where the SanDisk is being manufactured? You might have stepped away. Does anyone else? RAM is China and Korea.
No idea.
Thank you, James. China. So that means Korea, this Korea, Samsung might be making most of the RAM still. Because Samsung does everything in Korea, apparently. Any other questions or comments for the night before we head out? It was a short meeting today.
Hey, Haley, can we look at the Broadcom?
Of course. So Broadcom earnings, it's going up. It's not doing bad. 2025 is actually consistent earnings that's going up. The sales has been absolutely fantastic. So is with the earnings. We look at institutional ownership. 7,000. There wasn't a huge exponential increase, but wow, it's a lot of institutional support in Broadcom. We look at the daily chart. Let's see if there's something viable. This hurts. This shakes so many people out. Forming maybe extending base, but needs another base. There might be better stuff to buy than Broadcom. Why'd you ask about this? Is it the earnings that's coming out pretty much?
They probably have the largest number of custom chips for any of the AI vendors out in the industry. And I think there's a lot of earning projections up front. I think they signed a new deal. A couple of new deals that were just announced. I think one of them is announced, the other one is rumored. So it's like almost any major manufacturer, AI mega cap is building a chip through Broadcom.
Interesting.
But Broadcom had earnings today and they tanked in aftermarket.
It lost $18 or 4.47%. It's not doing very nice.
Almost everything you look in the report is positive, but the market reacted. I couldn't find anything negative on the announcement.
Yeah, if you're looking for a long term, I think it's, if you want something a long term hold, then it's one to go. I've had it for since 2020, and I think I've got over 300% on mine.
Job. Yeah, all-time new high sales for the quarter, all-time new earnings for the quarter, and it still dropped 4%.
Isn't 2026 estimate shows -1%?
Yes, -1%.
What is that?
Has to be wrong.
I don't think that's correct.
I think today Oracle got hit. Maybe the AI related stocks.
With EVGO is, so I suspect what happened is, so today announced the new model. So the past several days, what's been happening is that all the stocks associated with OpenAI have been going down, and the stocks more closely associated with Google have been going up. EVGO makes Google's AI chips, and so that's why EVGO has been seeing some uplift from the Google relationship and all that stuff. OpenAI has released a new model today, which people say is really good, so maybe that's what's going on, but it's illogical because OpenAI has already contracted with EVGO to make custom chips for them. So honestly, EVGO is a winner no matter who wins. As long as the AI trade keeps going, EVGO should keep doing fine.
Yeah, so at least that is what my thesis was. And I was really surprised with the market's reaction. But anyway, I think
sometimes the market does stupid things to shake people out, and maybe that's what's happening with here.
so. I think I'll just let it consolidate and then.
That's my strategy, too. I mean, I got into it recently. I should have gone in a long time ago, but I got it recently, and I'm not exiting anytime soon.
I'm surprised how quickly OpenAI is actually releasing models. I didn't realize they made a new 5.2 today. Before it was like 3, 3.54, then 5, then 5.1, and now it's 5.2.
Well, even today, humans are in loop with creating these models. By the time the models reach 10, there is no human and models are creating models.
Because the models will create better models of themselves because they know what their shortcomings are.
Yeah, Facebook, I probably believe everybody by now knows that Facebook created 2 chatbots and 2 chatbots were talking to each other. They were told to talk in English, but there were no rules or guidelines. Eventually, chatbot created their own language. It looked to us as gibberish English, but they were having a language talking with each other. And that spooked the researchers, so they stopped it.
It's kind of, I did read about that, and I was like, how do they create their own language so fast? That's mean the repository of their knowledge is absolutely just crazy. English is too slow. There's too many words. So I'm just, it takes tricks and electronic sounds.
I think it's funny to think about that, but it's important to remember that chatbots actually can't think. What effectively doing is they're finding a shorter way to, because of how you train a model, you give it a reward, in other words, the traits that better match the output you want. retain and the ones that don't get killed off. And so I think there is inherent, effectively, an advantage getting more information or more precise information than you can capture with language. It's not. Before people get worrying about bots trading their own language and taking over the world, it's going to call out. It's really interesting and it's really bizarre, but it's not actual thought.
That is a very good point because it's just efficiency of language. Like English language that's why I have a dictionary. There's multiple definitions for one single word. Like the F word probably has different definitions depending on the context. I know someone requested to look at TSM, and let's take a look at TSM. They're making a lot of money. They're going back into 2022 highs per EPS. There's a double bottom base. It tried to break out today. It looks like it didn't fully break out on the close. There was some bad news today. It looks like across most sectors. We'll see how tomorrow opens up. But overall, pick your favorite semiconductor. Pick Credo, Avago, Taiwan Semiconductors. See which one looks best, has the best history, and has the best new factor. And I bet one of them will do well. I'm mostly talking to myself, guys, by the way, because Floyd said I got to get back in the market. It's been too long, since July, almost half a year.
Hey, this is Floyd here. Would it be of any value if I had Haley demonstrate how to find the Bill O'Neill screen in Market Surge? I look at it every single week and I come up with some pretty cool ideas. Is there anyone that doesn't know how to do that?
Yeah, if you get to share.
There's 91 stocks currently on the Bill O'Neill screen. I open it up and I hit the space bar, go to the three windows by the wrench, and click. If you hit the space bar, you can quickly go through all 91 stocks. Daily or weekly, I go through these every Saturday. Out of the 91 stocks, I'm probably going to find 4 or 5 that I'm very interested in. This is how oftentimes I've found some pretty amazing companies. Some of them I never even heard of until I saw them on the screen. And so it might be an interesting exercise if you haven't done it before. First off, you have to have a Market Surge subscription. And if you don't, they always have, 2 or 3 week trials at a reasonable price. But if you pull up the Bill O'Neill screen, there's 91 companies on there, all generated by a computer. Some of them, I sometimes wonder, why in the heck are they on this screen? But overall, I'm really happy with what I get from the screen. And right there, Haley's showing you what the makeup of the screen is, how they put those in, and then the computer looks at 11,000 different companies and spits out 91 worthy of additional look.
What do you look at when you are searching?
Why don't you pull one up, go to the daily and pull one up, and I'll show you how I do it.
Floyd, did Sand show up on that?
I don't know the answer. So here's how I do it. It's a quick and dirty way to make an initial list. As I look at the projected profit, it's 485. And I think you're missing a line. Let me go to My Market Smith and I'll tell you what you're missing.
Okay.
On the bottom bar, I have dividend versus PE. I need a bar versus pre-tax margin. We need something there that shows a dividend PE range. Okay, so see where the dividend PE range is 29 to 33. The low dividend is 29, and I multiply that by 4.85, and that gives me, what's that?
I'm not seeing that, Floyd. Where's the dividend?
At the bottom.
Oh, okay.
So I take the lowest PE range, 29 times 4.85, and that gives me a projected future price of $140 on a stock right now that's 112. So I do that for all 91 stocks. This one shows that, barring any crazy things out there, this is showing this stock has the potential to go to 140. So hit the space bar.
Where'd you get 4.85 from, Floyd?
2026 projected earnings per share. Far left.
Over.
Far left. Up. Down. Right there.
Wow.
So we're at the space bar now, and let's look at the next one. ADI, analog devices. So they're showing 11.28, and I'll take that times 31. So it says the future price is 349. But if you go through and do that for all 91, is there something you want to do a deeper dive on? You wouldn't do a purchase solely on this initial screening. You would do a deeper dive on it. Out of the 91 that I'll go through on Saturday, I'll pick out 5 or 6 stocks that I want to know more about. And frequently that's where I picked up Hecla Mining's HL. That's where I picked up Ciena, CIEN. And occasionally I bought a stock that until I saw it on the bill and nail screen, I never even heard of it. Had no idea what they did. And so I do a deeper dive. And I want to look at, was the price above 10? Is the volume, strong volume? Read some recent press releases so I can get an idea. Is there something there that really catches my attention? So right there, you saw that's where I picked up Hecla Mining HL. And Ciena I picked up on there. It's just another tool to help you assess if you're looking for where to invest some money. This would maybe be a starting point. You have to be really careful because this is computer generated, and occasionally I'll see a stock and I'm going, why the heck is this on the Bill O'Neill screen? It's something I wouldn't touch. Or occasionally you'll find if you take the low PE times the estimated future earnings, the current price is already higher than that calculated price. And so I usually just hit the space bar and then go to the next one, because if the price has already run up to what the suggested PE times the 2026 earnings, if the price is already higher than that, that's one that typically I wouldn't be interested in buying. So that's just a little flavor of one of my weekend activities that might be helpful to others.
It is, Floyd. It's actually pretty cool because I was looking at the screening criteria. This says I want to find something inside of the base since percent off hive is greater than or equal to -15. I want institutional quality stocks because current price is greater than 10. I want to make sure institutions do own at number 5 is greater than 5. And I just want a good quality stock for every other indicator. So it's a very good screen. It's bare bones IBD. Find me something base, something viable. That's a very cool screen.
And you can take this screen, and if you want, you can come up with O'Neill version 2. And if you want to go in and change any of those variables on the screen criteria, they go A, B, C. Maybe you only want to look at A, B.
Yep.
And earnings per share percent change from last. Maybe you want that to be greater than 25. You can modify that on your own criteria such that maybe you only come up with 15 stocks or some. So right there, just taking C off, now you only have 72.
Yep.
And make the sales percent change from last quarter 25. Okay, now you have 60 stocks. When I modify it, I'll say Bill O'Neill screen version 2 or version Floyd so that I don't mess up the original Bill O'Neill screen. It's a tool. Haley's made a few changes, and now we only have 57 stocks to look at instead of 91.
Or we can go crazy and say sales is 100% plus, just to see if there's any 100% plus sales change in the last reported quarter. It's probably only going to be a handful. Handful.
Wow. Mining, QXO, Solaris, Texas Cal. It's interesting. Very diverse.
Yeah, it's a very interesting group of 100% sales. Last reported quarter. Let's see what happens. Biotech, mining.
There was a question there, do I use any of the other screens? Occasionally I've used the Buffett screen and maybe the Peter Lynch, and I've spent some time looking at other screens, and I always went right back to the Bill O'Neill screen. I didn't find the others provided. For me personally, you might find that another screen might be useful to you, but it wasn't useful to me. But look at the Benjamin Graham screen. They only have 22 companies.
Yeah.
But I don't like all that criteria, though. They got a whole bunch of stuff that's just greater than 0. So I think Benjamin Graham tends to go for
book value.
Value stocks. Sometimes value stocks do well, but I like growth stocks.
That's what we're trying to play here. Because it's 6 years ago, you want a greater than 0. I mean, the Amazon, if you're looking for EPS greater than 0, you'll never find Amazon in the beginning years.
But maybe click on James O'Shaughnessy. It'd be interesting to see what he comes up with. See, says I think he's studied under Bill O'Neill for a while, and he's written a couple of books, and he's a pretty cool guy. So it might be interesting to compare his 87 to O'Neill's 91.
I think his stuff is more like GARP, growth at reasonable price.
Yeah.
I haven't seen you in a while, Herbalife. That's probably exactly what happens.
That's coming back from the dead.
I Googled that Norwegian Sovereign Wealth Fund. It hit $1 trillion 8 years ago and is now valued well over $2 trillion in late 2025.
Wow.
Making it the world's largest sovereign fund. Wow. Boy, they're doing something right there.
to move to Norway.
Wow.
I have a question on stocks or companies which haven't IPO'd yet. Has anybody looked at if there's a way to get into something like SpaceX or OpenAI before their IPOs?
I haven't been investing in the stock market. Recently, I got into Notion, Databricks, and Hugging Face. And I had deals come across my table of SpaceX, OpenAI, and stuff like that. And XAI too, also. But SpaceX has raised so many funds, it's probably on Series X.
How do you do that? How do you?
Just people come to our and say, hey, I got some. So some employees sometimes want to sell their stock. Sometimes a fund buys a whole group of stocks from employees, or they're trying to raise a seed round and you become part of the capital raiser. So when people come to you, there's a few websites that does it. I think the easy to access ones are Forge, Hive, and Upmarket. Those are the three they can probably get it. You can also do AngelList, but AngelList is more of a fund model instead of direct to one company. So every single one's different. Bricks recently raised around $138 billion, and the price per share is going to be $190 something per share.
But aren't all those sites only for accredited investors?
Yes, it's for accredited investors.
But you can go into those sites, and if you're interested in some of those pre-IPO companies, you can go ahead and purchase it directly from them?
Correct.
Okay.
Because employees sometimes need money, so they have to go on secondary markets. I forgot who asked, but yes, you need to be an accredited investor, but you can also get a 65 or Series 7 license, and then you become accredited just through income or net worth.
Would you mind putting the names in the chat? Yeah. I know some time back I was looking at, I thought there was a Cathy Woods ETF, which also invested in pre-IPO companies, but I can't find it anymore for some reason.
Oh, wow. I know Cathy Woods did that. She's doing everything too.
Yeah.
Yeah, so there are ways. It's just you have to hope it comes through. One of the companies I want to get into is GraphCore, and GraphCore is probably the hardest company. I can't find secondary shares on the market. I've asked funds to bring it to me, but no one's really selling it. They're all keeping it. Thank you, Rick, for finding that out.
I was just searching. Haley, what's Floyd's background? I've seen his name before.
Floyd's original Alaska IBD meetup, which I now changed to legs because IBD is no longer supporting meetups. So Floyd is an engineer by trade, but he's as a stock enthusiast who has done many back testing to find leverage ETFs. So his specialty is looking at NUGT, which is like gold miners 2x, or he's looking at TQQQ and trading those. And because of multiple people during the system throughout the years, and they've been trading it, and Floyd actually trades it himself, and he's done back testing, and that's how Leverage Edge came up with Gary Taylor. Floyd and Gary Taylor worked together to create a system that to mimic his trading style in leverage ETFs.
Okay, great.
Any other questions I can answer, or any other stocks we want to look at? I've been really enjoying this discussion.
Just to highlight that again about Floyd. Floyd ran this meetup for 15 years before Haley just took it over.
I've probably been here for about a year, but I haven't ran it by myself because I wanted to continue his style of presenting. I've changed the times, I've changed a few things, but I want to continue the style of investing. So I was probably meeting the group for the first time right around this time when I did a presentation on IPO stocks. Any other questions I can answer?
Are you still following the leverage edge?
I check it on a weekly basis. I really need to check it on a daily basis.
Also, the ETFs that
So
you use.
one thing I'll say about the leveraged edge strategy, Gary took over from me about a year ago with my permission and has developed a lot of good training modules through thousands of back tests. We've concluded that all the leverage strategies we had were based on either daily charts or on weekly chart action, and the daily charts for a stock like TQQ or SOXL may generate 60 or 70 buy and sell signals every year. If you use the weekly strategy instead of a daily strategy, maybe there's only 8 or 10 buy and sell signals. Gary's done much more back testing since he took this thing over, and he's concluded for major leveraged ETFs like TQQQ, the weekly strategy is the best way to go. And that's what I've been using for quite a while because I don't want a strategy that has me in and out of an index fund 2 or 3 times or more every month. That doesn't fit my personality at all. But if I need to be in or something, maybe 2 or 3 times every quarter, I can handle that fine. And so that's one caveat if you're thinking about leverage ETFs, of whether you should look at daily bars only or should you look at weekly bars. And if you do the weekly strategy, there's multiple rules. Unless there's a huge sell-off, you typically get a sell signal on a Friday. You sell on a Friday, and then you may get a buy signal during the week, but you wait until Friday to buy. You can cheat a little bit and buy early, like I've done a few times on Wednesday or Thursday, if you think where this thing is going. But the weekly strategy is what has generated some pretty good profits with reduced stress compared to the daily strategy. You can look at Gary's website and his training videos and figure that out for yourself. Part of the success in investing is know yourself. And we're always learning, and maybe you never 100% know yourself. But if you're a newer investor and don't fully understand your strengths and weaknesses, you're bound to make some pretty significant investing mistakes. The market is crazy. It's called the great humiliator. When you think you have it figured out, you'll learn that you don't have it figured out. Everybody on the thinking here right now will probably say, yeah, that's right. I thought I had it figured out and I didn't. And so part of your personality trait that can get you in trouble or help you be successful is how quickly are you willing and able to admit you've made a mistake. The stock is not performing like you thought it should, and you sell it when it's gone down 5, 6, 7%. Because if you don't sell it then, you may be looking at, should I sell it now that I'm down 30% or I'm down 50%? That's just a little bit of my philosophy of successful investing.
Is this a proprietary here where it should say buy or sell signal?
It's proprietary
Yes.
together.
Proprietary to Gary, but he has a very low entry cost. You can try it for a month or a quarter and decide if it provides high value. I don't remember what he's charging, but I think it's a real reasonable number. And then you get update. If he finds through back testing, if he wants to update the buy and sell signals, if you're one of his members, you'll get the update immediately. Thing that Gary developed with help from one of our beta testers was to put in a secondary indicator. For many of the leverage ETFs, the secondary indicator is MACD. We find that if we use MACD as a secondary indicator, we have fewer losing trades. I won't say we have no losing trades, but with MACD, maybe there's 15 or 20%, or maybe even more, less losing trades because the secondary indicator is the thing you check. When you get a buy signal, does the MACD confirm that or not? You can figure that out from Gary's program. That's something he added after he took it over from me.
Hey, Floyd, is that the screen we're looking at showing the buy and sell signals?
Yep.
Yes.
From Gary and Taylor.
Yeah, and you can see on this one for TQQ, the green boxes are the buys and the red boxes are the sells, the one with the purple band going across horizontally.
And how religiously do you follow those?
What's that?
Whenever you get the sell or the buy signal, you execute based on those trigger points?
I will be perfectly honest. I try to follow those, but I don't always follow them. Sometimes it might be because of my entry price or I'm busy doing something else. But notice that about in the middle of the purple bar, around August and around October, there was a sell, and almost immediately later there was another buy. If you're following his system religiously, you would have sold and bought at those two locations. Occasionally, if I'm feeling the market is just doing a little wibble wobble, I may just hang on to my TQQ and not sell when that signal comes out. That's just me. I'm not saying that will help you do better or not. That's how I trade. I look at these graphs almost every day. Hope that helps.
S is sell, B is buy.
If you look at that horizontal bar, if you look around August, the sell signal was given because the fast stochastic crossed below the low stochastic and got lower than a level of 80. Then we have across above a couple of weeks later. So there's a buy immediately after. You're hoping that when you get the buy signal, you're buying it at a lower price than what you sold it at. But sometimes when you buy it back, you're buying it at a higher price.
Yep.
But if you go to the bottom, see where it says trading panel? I think, no, maybe the strategy tester, trying to figure where do we go to show
Profit.
the performance.
We'll do 2025, 01.
Okay.
So then you can tell the year-to-date profit right there.
So you start with 10,000 and you have 18,455. So you made 82% following the model. And if you did buy and hold, you would have made 36%. So 36% versus 82% for 2025. Click on the box, the little horizontal dialog box that says list of trades. Shows you in 2025, there were 8 round trip trades, a buy and sell. Looks like the most recent buy was November 28. When was the first buy? Let's scroll down and see. The first buy occurred on January 17, and then you sold on February 21. You didn't buy it back again until April 11, and you sold right away because of the tariff mess that was going on. You lost $1,000 in those few days, but you got back in on the 17th and you held until the 2nd. Using this trading view model, you can analyze for any time frame from a few months to a few years how many trades you would have and your final total value. If you sign up for Gary's program, he has really good educational videos that will show you exactly how to use TradingView.
Is this the weekly site? Right.
Yeah, that's the weekly. We're showing a daily chart, but the decisions are made based on a weekly basis. So even though you're looking at a daily chart, we're using the weekly basis rules in the screen that's in front of you. If we would use daily rules, instead of having 8 trades, we probably would have had 30 trades or 40 trades.
Yep. I've actually stopped looking at the daily rules. It was too choppy and it also underperformed the market considerably.
I think we've said enough about this, but it gives you an idea of the power of having some means. It doesn't have to be Gary's program. You can develop your own, but if you have some means, you can use moving averages, you can use other indicators, but if you have buy and sell rules that are back tested and proven, you'll do better than the people that are doing buy and hold. That's the whole goal here, is how to do better than buy and hold.
Yep.
Yep. I have implemented it using a true strength indicator. It only had 2 trades for this year and it made 75%.
Wow. What are the buy and sell rules?
I'll have to check them. They're very similar to what you have for stochastics, because Gary's tool works on stochastics, I believe. So instead of stochastics, I use TSI, true strength indicator, and MACD.
And you only had 2 trades?
Yeah.
And you made
75%.
Fantastic, man. Congratulations.
Where did you get the system? I'm sorry. Whose system is it?
No, I created on TradingView using TSI.
Oh, okay. You created your own. Gotcha.
Yep.
What's TSI available in TOS?
Yeah, I believe so.
What's TSI?
True strength indicator.
So use that standard deviation and
what is that again?
Used that with standard deviation and stochastics.
No, I haven't used stochastics at all.
Okay.
Sounds like people are interested. I'll send you an email about the TSI and the MACD that you're using to get more clarity on what you're using. Thank you for the link about the true strength indicator.
Yeah, the parameters in the TSI and MACD, the standard parameters, or did you make changes to that?
I'm using 522 and MACD I'm using 392.
Is that weekly or?
So I use weekly parameters, but on daily chart you can see it.
Got it.
What was it again for the MACD that you use, Yogesh?
392.
392. I'm just putting in the chat. So TSI is 522, MACD is 392.
Yep.
Thank you for being willing to share those. Sometimes it's like people gatekeep, but it works in this market. Who knows if it works in the next market? You have to back test and you have to see your own trading rules.
Yeah. So the only issue I have with this system, TSI or even stochastics, if you are aware of what is known as curve fitting, right, it's used heavily in machine learning. What it means is essentially you take 10-year data point and then you try to fit a formula that works the best for those 10 years. That's called curve fitting,
Yes.
which is what is being done in Gary's formula as well, and in even my formula as well, TSI also. Because what we are doing is taking a set of data and then making sure that these parameters work the best for that set of data. That works fine until it does not work. What I mean by that is markets, as long as they are trending, this system works phenomenal. But once it gets choppy, then the system fails. During the choppy part of the market, you are going to get some substantial losses before you see some substantial gains.
And Floyd, here, one thing that I've thought about is if you get in a choppy market, potentially you would maybe develop a rule that if you have 2 or 3 losing trades in a row, you just stop. You stop trading. Something's wrong. Something's broken. And you take a timeout maybe.
How can you tell objectively, like with data, when you're in a choppy market and when you're not? Has anybody thought about that? I'm trying to figure out how to quantify it, like within a range or up and down.
Look at the graph.
How do you quantify it? How do you make the rules?
I did some back testing and discovered that I have a different set of rules I could play with, so you shouldn't assume that it works for everybody. What I found is that if the technicals I was testing gave me 2 failed trades in a row, and then I waited until the price crossed the level where I took the previous, and never take a new trade lower. After that happens, you have to totally take a trade higher, because what you want to do is to break out of the range. I find that gives me better results on my own back test for my system. And I'm not going to say that works for everybody, but that's what I'm trying to do.
That's one of the things I was looking at. If you're range bound, you're likely in a choppy market. If you're within a range, that's one way to define it. Also, if you're going up like the 21-day moving average, you're going above it, below it. That's the definition of a choppy market. So like I said, I'm searching for how to quantify it. How can I make it into a rule, or how can I make it into my system to automatically get out and not wait for 3 bad trades, for instance?
I post the performance. If you invested 10,000 every year using what I'm doing, that's the performance. So don't look at CAGR and all that stuff. That probably is wrong, but everything else is right. And this is the table that I've built in TradingView.
Nice. Yogesh put it in the chat.
Can we look at that leveraged ETF screen again for 2022?
2022. Yep, I can do that.
A tough year.
So I'm gonna minimize. We have a total of 4 trades.
And hold was negative 48%.
Floyd's looking at.
So even though you lost money, you did 10 times better than buy and hold.
When was the first exit in 2021?
They bought in May 27th and exited on June 10th. Bought here, sold here. Then bought here and sold here.
And between June 24th and August 8th, it made really good profit.
Any last questions before I end the meeting? We're at the top of the hour.
Does the tool do inverse ETFs?
Gary Taylor has not done inverse ETFs. He is looking for volunteers to do some back testing. If you're interested, contact Gary.
Our initial work on inverse, like for example, SQQQQ, we never could figure out how to consistently use that to make more money. So I gave up and I don't even think about it anymore. It's just, there are short periods of time when SQQ will make you money, and there's other times where it will hand you your head.
Every strategy I tested with SQQQ had ridiculous risk reward. You could make money, but you had to endure 50+% drawdowns. It was just nuts.
Yeah.
So you need to understand that market is up biased. If you want to make money with SQQ, you cannot use this strategy as is. It has to be modified significantly, and you have to do quick trades. Only then you make money in SQQ or any inverse leverage fund.
It's correct. But even with short trades, you have to endure some really nasty swings because the biggest upswings happen in a down cycle. If you end up getting in on the wrong day, the next day you could literally lose 20% of your account.
Correct. Because I was staying beat up.
I'm gonna go ahead and end the meeting tonight. We're at the top hour. I know some people wanna. I love the discussion that we had tonight. We went over some tax topics. I love the discussion about how Yogesh, you did a TSI indicator with a MACD and you did 2 trades this year with that. That was absolutely fantastic. Thank you, Floyd, for reminding us about RMDs, about making sure that we're taking the withdrawals. And it sounds like a lot of us got problems with estimated taxes and we got a lot of penalties either by overpaying or by underpaying. So just remember, we have to pay. Remember, everyone, do the analysis on your portfolio. See how you trade it in 2025. When we meet in 2026, we'll go over growth stocks and we'll see how we all did as a group. See everyone later. And until the new year, happy holidays.
Happy holiday.
Thanks for putting all this together.
You're welcome.
Thanks, Haley.
You're welcome. Glad you guys are discussing a lot because I was like, I'm going to make a short meeting. But I was like, yes, people are discussing. I love it.
Yeah.
So thank you, everyone.
Thanks.